Hello, everyone, and welcome to today's webinar, High Speed and Secure, the Future of Cryptocurrency Exchanges. My name is Tova Devorin, and I'll be your moderator. I'm the community manager here at Unbound Tech, and I want to reassure you all that my voice does not normally sound like this, so I hereby hope that your weather and your health is better than mine right now. Don't worry, you only have to listen to me for the first minute of introduction, and then we'll get right to our speaker. I'm pleased to introduce you to our speakers today, Jin Chao and Professor Yehuda Lindell. Jin is the Chief Strategy Officer of Binance and has previous corporate experience at Dell and the NBA. Yehuda co-founded Unbound Tech in 2014, currently serves as the Chief Executive Officer, and is a world-renowned cryptographer and Professor of Computer Science at Israel's Bar-Ilan University. Welcome, Jin. Welcome, Yehuda. Thanks for being here today. Now, before I hand over the mic, I just want to make a few general announcements about this webinar. First, today's webinar will be available on demand after the live session and is accessible using the same link you're using now. So if you have to leave for a second, take a break, you could always go over it later, no worries. Second, we've added the slide deck and our guide to best practices for crypto asset protection and the guide to growing your trading volume in the attachment section. Feel free to download them at any time. It is located at the bottom of your screen. And third, we'd love to hear from you during today's presentation. If you have a question for Jin and Yehuda, and we hope you do, please send it through the Ask a Question tab at the bottom of your player. We'll be answering questions at the end of the session, and if we don't get to your question in today's webinar, we'll be following up with each of you after the screening. So, without further ado, let's talk about trends in cryptocurrency exchanges. Jin, please take the stage.
Thank you, Tova, for the introduction, and thank you, everybody, for dialing in and listening. Appreciate the opportunity, and so I'll just go ahead and dive right into it. So to understand a bit about the future of cryptocurrency, I think it's helpful to take a look at the past, and not just in cryptocurrency, but perhaps in similar industries. So this first slide I have here is the NASDAQ index since the birth of the internet era with the IPO of Netscape in 1995. So a lot's been talked about the volatility in cryptocurrency. And as you can see, since the onset of the internet era, there was a huge hockey stick rise through to 2000, 2001, a subsequent crash in the original dot-com boom, a long recovery, another correction, and then more recently, in recent years, we've seen a return in the past bull market. So I would make a lot of analogies between the early stages of the dot-com industry and where we are in cryptocurrency today. I was actually an internet investment banker during this period, and so at that time in 1999, Yahoo was the dominant search engine of many search engines, and it looked like they had sort of won the game. And then following the bust in the original dot-com boom in 2000, 2001, it would have been hard to have foreseen another opportunity in that space emerging. But if you look at the next chart here, this is, oops, I apologize, skipped around. Let me go back. This next chart here is a company called Google, which went public in 2004, and you can see this is compared against the NASDAQ, and you can see how flat that line looks. Google has, since its IPO, outperformed the NASDAQ 1,700% to 300%. So you would have missed the boat if during the original dot-com correction you had thought, well, this cycle has run its course and no need to look at technology and search engines. So similarly, let's take a look at the industry today. The purple line here, as some of you may have guessed, is the graph of Bitcoin pricing since its inception in 2009. And that flat line there is not the NASDAQ, but it's actually Google. So as of this year, investors in Bitcoin in 2009 had a 9 million% return versus in that same period since 2009, Google has been up 600x, so 6 times. So this is probably the largest wealth creating technology in such a short period of time that we've seen of late. And so let's take a look at this next chart. This is a 1-year chart of Bitcoin, and some of you may take a look at that and recognize that as being the 2017 bull to bear market. But that's not the case. This is in fact 2011. And in fact, we saw a similar chart if you looked at 2013 going to 14. So Bitcoin has had a history of correcting in excess of 90%. And so what we saw in 2017 was actually, I think, an 85% correction, if I recall correctly. So this is something that people who have been following this industry for a long time are familiar with, but has hit really a lot of news headlines recently, largely because of the adoption. So the amount of people that were in this space in 2017 versus now has increased by an order of magnitude, and I'll allude to that later on in the presentation. And so lastly, this chart is Binance Coin, or BNB, which is Binance's own token that operates on our own chain relative to Bitcoin prices. So we just came off an all-time high against Bitcoin in the June timeframe. And this is not, unfortunately, updated for the last couple of weeks, but I think recently we've gained a little more ground against Bitcoin. But the last couple months has been slightly lower trading volumes. So that's a history of where we are, and I think the topic now is where are we going? And I think I want to tell a little bit about the Binance story because it informs quite a bit about where the industry is heading, given that we are at the moment the largest crypto-to-crypto exchange globally. And so a little bit about why we're doing what we're doing to begin with. Well, our vision here is really around freedom, and that's the increase of freedom of money globally. Over the last decades, there's been sort of an ongoing trend towards globalization, whether that's travel, commerce, education, information. And so currency needs to evolve accordingly. And I think cryptocurrency is that solution because it does sit on the blockchain, which is a tool that really allows for efficient decentralization. So decentralization historically is not the most efficient way, although it can be quite fair and secure, not the most efficient structure for central entities like institutions, corporates, government. But now with blockchain, there is potential to do that. So that's sort of our overall mission, and then, our vision. And then our mission alongside that for Binance as a company is to build, and specifically to build core infrastructure services around the world's crypto. So while we are best known for our exchange, we have developed quite an ecosystem around that, which I'll get into shortly. But quickly, what we value both internally and externally, and how we've built the company we have today, we do feel this lends quite a bit to our success in the market and hopefully in the coming years. First of all, we are all about mission over money. Although we are a for-profit company, we are guided first and foremost everywhere from our recruiting through to our internal processes on the mission. We're looking for leaders, not managers. We tout freedom a lot with accountability. So we've grown significantly by headcount. We've tried to maintain a fairly flat organization by making sure that we have use software systems in place for accounting on what people are doing, but allowing them to do what they do. So very difficult for us to have titles and roles. And in fact, my title is strictly an external title. Internally, we do not abide by that. Transparency and authenticity. I think culturally, you've probably, if you've paid attention to us, have heard or seen our founder, CZ, on any number of social media platforms and live AMAs, and in particular when there is crisis. So we respond to that directly to our community as soon as possible. And I think using that, we've gained quite a reputation and established quite a lot of amount of goodwill in the market. So earning that trust is core to an exchange provider that is providing the liquidity that we do and the services that we do. And that ties a lot to communication engagement. You really can't have those things without having a culture of communicating and engaging. And this is why we do enjoy doing events and webinars like this. A few of the features that have allowed us to really become one of the largest exchanges, first and foremost, as a baseline now, is security and performance. You wouldn't be able to say this a few years ago with exchanges. There wasn't a whole lot of selection. There weren't that many people in the market, and so people didn't have a whole lot of options. And what Binance did first and foremost was build a matching engine that had the performance of institutional grade, Wall Street type performance and security. A lot of that is thanks to our partner at Unbound and others. And we did have until earlier this year the best reputation for never having gone through a major hack. We did have one, as many of you may know, earlier this year. But what that did was force us to dig deep and actually accelerate a lot of the security product pipelines that we had already had in place, really accelerate them and implement everything that we would have done over the course of 2019 within basically 2 weeks. So we are very confident that prior to the hack, we were the most secure, and after the hack, we are now the most secure. And to the extent that we can't guarantee that any system is 100% secure, and so to that end, we do self-insure all user funds. Project selection quality is a big one as well. There were a lot of ICOs in 2017. There continue to be a lot of projects that are seeking to list. And we think by maintaining a pretty rigid screening and filtering and evaluation process that we have a reputation for listing projects that have very capable, well-meaning, and value-creating projects to choose from. And that has actually been mimicked by a lot of exchanges. So I think when you look at what other cryptocurrency exchanges will be doing, a lot of things are mimicking what we've done. Another one here is customer support. A few years ago, I think if you submitted a ticket on most cryptocurrency exchanges, you'd be lucky to get a response, period, and then perhaps within a week or so. 80% of our tickets are solved within 24 hours with, you can see the satisfaction rate here, and we are continuing to push that envelope. We'd love to get that down to an hour. We are global, so at launch, we are just over 2 years old, but from day one, we had launched globally. Cryptocurrency is a global service, and so we were growing simultaneously in 180 countries. We now have team members in 40 countries, and we're supporting over 15 languages, and this is something that we're aggressively expanding. In fact, I think 15 is probably an old number. We may be at 17 right now. And so, you know, this is really a culmination of that. Basically, within 5 months, we had become the highest volume exchange globally. With an eye towards that, in order to maintain that, we do have a user-first mindset. This sounds a little cliche, but we do live and breathe this. We don't do a whole lot of traditional marketing. Most of our marketing, if not all of it, is grassroots and on social media. And so, you know, we take the feedback as well, good and bad. As we scale, we will probably likely need to embrace a little more traditional media, but we are cognizant that grassroots, at least in our minds, is the best way to grow the community and engage them. And then, again, probably the most significant metric, at least for an exchange at this point, is really liquidity. So this is what we're providing to the market. For most of our listings, we represent greater than 50% of the total market volume. And I'd say for 2019, this still applies. Our average trading volume is around $2 billion US in value. Okay, so what exactly is the ecosystem that we've done beyond our central exchange? Well, there's quite a bit. We do have what we believe is a world-class wallet, Entrust wallet. We have several departments focused on educating the users, both prosumer users, institutional users, as well as casual users, between academy, info, and research. These are educating different market segments. We do have a charity foundation, which is meant to demonstrate the benefits of blockchain. So putting blockchain, applying blockchain to charities will allow for the transparency one needs from all the way from the donator to the recipient in real time. We have launched alongside our centralized exchange, a decentralized exchange that is powered by the Binance chain. And this is really to show users that, hey, we want them to have every option available. So if you want customer service, if you want us to look after your funds, go ahead and use Binance.com. It's more of sort of that traditional exchange model. If you want higher, sort of much higher security and much more control over your funds, that's what the decentralized exchange is there for. In addition to that, we just recently launched a futures market. The futures market is about 10 times the size of the spot market, similar to traditional assets and currencies as well. I think that this is something that will certainly drive our growth going forward, and you'll see that probably from a lot of other exchanges if you haven't already. In addition, we continue to expand our fiat gateways. So you can see what we've listed so far. Right now it says US coming soon, but that is actually now live as of 8 p.m. Hong Kong time yesterday. So that is now live, and expect to hear a lot more announcements from us on other fiat gateways. And then finally on the bottom, we have X, Labs, and Launchpad. Binance X is what we would sort of view as a top of our funnel for sourcing new projects out there. This is a developer platform. It's meant to provide and educate developers and technical talent on our tools and protocols for them to build projects. Even if they have no idea what they want to build, we have a whole list of RFPs for people to take a look at, and if they find a problem that they want to solve, we're happy to provide fellowships and coaching to get them started. Binance Labs is our corporate venture arm. So this is projects that perhaps have come out of the development platform and have a commercial idea. So as they start to solidify the commercialization of that idea, that's something that Labs will support. We've had 2 incubation seasons in the past year, and we'll continue to evolve that program so that it aligns much more to Launchpad. Launchpad is our IEO advisory arm, and this is another trend that we feel we've set this year. We had it a number of years ago and revived it this year as we came out of the crypto winter. And we've had 9 successful launches, and I think we'll be announcing our 10th Launchpad project shortly. If you look across the board, our IEO projects using Launchpad have outperformed other IEOs by almost 3x. Just a little blurb on the Binance chain. This is something that we released prior to the chain. The Binance coin did sit on Ethereum. We've migrated that to Binance chain, and have also migrated almost 100 other projects over to our chain. The benefits here, really, this was custom designed for payments, basically. So for high volume transactions, it's 1 second block times with instant finality. This solves a pain point that is inherent in some of the other larger chains. Sorry about that. I'm getting a little bit of a lag on my screen. Binance Coin, and actually we've officially just removed that name, so it's actually just BNB now going forward. But this is native to our native asset on the Binance chain. as of this writing, it was a $3.5 billion market cap. It's probably closer to 3.2 today in the last couple of weeks. So it was at the time the 7th largest. It may have slipped to the 8th largest, but regardless, it is one of the, in fact, it probably is the best performing crypto asset of 2018 and 2019. So our coin is up, let's see, 5x for 2019. And this is primarily used, initially used for trading fees on Binance.com and discounted trading fees. But what we've done is worked very hard to find a lot of use cases and increase the utility for this. So you can see on this chart on the left side, these are all the partners that we had that either accept the Binance coin or have adopted the Binance coin, or where you can use it. So, and then on the right side, you can see the projects that have migrated onto Binance chain so far. And I actually think this chart, one of the problems that we face is updating these slides. So I think we are up to 97 on the Binance chain. It's a good problem to have, I suppose. And so here's the story so far. You can see really the acceleration of announcements and major initiatives. And part of the reason is back to what I would state earlier, is that our industry is still in its very early stages. And so we really can't sit back and say, oh, hey, we're the number one guys out there. Great. There's none of that thinking. There's an urgency that this is still day one. We do adopt a lot of principles that we hear from Amazon and Google and what's made them successful. And so we are building with as much urgency as ever. And so you can see some of the recent announcements here. Some of the big ones lately was obviously Binance US, which opened again yesterday. Binance Futures, Venus, which was a hot topic. It's a platform for regional stablecoins. And then our own Binance USD stablecoin, which was approved even in New York, which is one of the toughest regulatory environments in cryptocurrency. And so I'll wrap up here by looking at some indicative industry metrics and again, providing some context around this. As I mentioned earlier, prior to 2017 versus post-2017, there was an order of magnitude increase in adoption. But that said, before 2017, we're less than 0.1%, and we're currently at 1% at best. That's probably the most optimistic number. We're still probably under 1% global adoption. And if you assume 10% is sort of the tipping point where you can say, okay, this has arrived and it's about to go into the masses, we're still an order of magnitude away from that. Just a lot of people ask me what time frames to expect around that, and the only thing I can sort of point to is the internet adoption, how long that took from 1% to 10%, and more recently, smartphone adoption, which took about 5 years to go from 1% global to 10% global adoption. If you look at spending, cryptocurrency still largely is driven by trading and speculation. So actual spend in 2018 on merchants was about $2 billion US. Sounds like an okay number until you compare it to retail sales in China and US alone, which was 10 trillion. So we're really talking about a sliver of a sliver here. I have a couple of trading stats as well, but my point is there's a lot more liquidity in crypto, not because there's that many people, it's because of the market cap at the end of the day is still quite small. You're talking about an industry with a market cap of less than $300 billion. So that's 1/3 the size of one single company, Amazon. So again, very early stages. And if you were to ask when there's maturity in this, I would say, one or two more zeros at the end of that market cap. And then what you would see is that trading volume as a percentage of market cap would look a little more similar to foreign exchange, which is about 12% daily volume relative to the M2 money supply. And then if you look at traditional stock markets, it's really about 2% are traded daily relative to the overall market cap. So you would see numbers drop to those levels. That would be a sign of a little more adoption and stability. And I think that concludes my remarks. So thank you very much, everybody.
Thank you so much, Jin. Now we're going to go over to someone who knows a lot about securing crypto at high volumes and working with lots of different coins. Professor Yehuda Lindell, over to you.
Okay, thank you very much, Tova, and thank you, Jin, for that. So really what I want to present now and talk about is how it's possible to support all of that activity that Jin was talking about without sacrificing transaction time or security. And I don't think I really need to motivate the problem. Where there is value, there is theft, and how do we protect our assets without making it unworkable and without harming the business needs. And that's really the main question that I want to address. And there's something very unique in the cryptocurrency space, which makes the issue of security very, very acute. And that's beyond the value. And since it's a digital asset, it's protected by a cryptographic key. That's the signing key, which is the address that protects the cryptocurrency. And what's interesting is that typically we're used to thinking about protecting the cryptographic key from being stolen. But in this setting, it's enough for an attacker to fraudulently use the key once, and they can transfer all of the funds that are protected by that key. They don't need to steal the key, they just need to use it once. So it's not a problem of key theft, but rather a problem of preventing fraudulent key usage. And that's a much more difficult problem. And the second thing that compounds this even more is the fact that because these are decentralized networks, and because of the way blockchain is built, and that's by design, not by mistake, it's an irreversible transaction. So once a transaction takes place, you can't actually realize that someone had stolen money and therefore go back and change it. And therefore, we can't afford any mistakes. So when we come to talk about protecting cryptocurrency, there are a few different scenarios we can think of. One is for a custody type scenario where it could be a traditional financial institution or a cryptocurrency exchange or something else. Here we're talking about taking large amounts of funds, protecting them as an investment. There doesn't need to be a large turnover. In fact, the turnover is usually pretty small. For that reason, the transactions can be relatively complex. However, there is still an issue of transaction time, because if people want to get their money out, they may want to get their money out fast, either because something is happening in the market that makes it urgent, or because they have a specific need. So although on an ongoing continuous basis, there isn't an issue of transaction time, whatever technology is used has to be able to support fast transaction time when it's needed. And this type of solution is offered to higher-end customers, funds, et cetera, et cetera. The next scenario, which is the most common one that we're seeing today, is that of exchanges. So here, like Binance, there's a large exchange with high turnover. There's customers need or want to have fast transaction time. They want to transfer currency between coins, or they want to actually get physical money back or fiat currency back. They want to have fast transactions. And in some exchanges, this can even actually take days to close a transaction because of the need to physically have people come together and go into a physical vault. And that actually causes a lot of problems, which I'll come back to a bit later. In a lot of these exchanges, there's a separation of vaults in different sizes, large, medium, and small vaults. And there's a desire of high protection, of course, the larger vaults, and smaller protection or lower protection on the others. And we want a solution that's flexible, enables us to tailor the complexity and security versus the speed of transaction and simplicity. And the one solution should be able to serve these different sizes of vaults and provide that flexibility. And the third, which I won't refer to much in this presentation, is end-user wallets. So end users want to hold their own funds if they're not holding it in the exchange. And then they need to be able to have protection against it being stolen and also against losing the keys and so on and so forth. The technology that I'll present today will support all of these, although I won't be focusing on the wallet scenario itself. So what are the requirements from a security solution to these problems? First and foremost, of course, you want high security. And as I mentioned beforehand, this is not merely against key theft, but also fraudulent key usage. We can't afford to have a situation where an attacker can just even use the key once, even if they're unable to access the key itself, because that one usage is enough to transfer all funds. Backup and disaster recovery is an obvious one. We know of many examples where people lost their keys and just weren't able to get their funds back. Fast transaction speed is what I mentioned is a crucial issue for exchanges, and I mentioned also for custody solutions, but in a slightly different context. And flexibility, which is fine-tuning security and usability, the ease of transfer. And no less important on the flexibility is also broad support. There are many different coins in this market, and we need a solution that will be, firstly, support existing coins, so all the coins that Jim mentioned earlier, for example, are supported, but also new coins that will come out. We don't know what's going to be popular next year, and this type of technology has to be able to support that, different signing algorithms, different standards for key derivation, and so on and so forth. What are the existing solutions out there? There are cold wallets or disconnected hardware. These are not flexible at all, and it's a very big concern. And there's very poor usability in terms of long transaction time. You need people to come together physically to go into the vault to connect whatever needs to connect to make the transaction. It also causes employee dissatisfaction because they have to do shift work, they have to come in on the weekends. How fast can you do this is also a very big question. And even security is not that clear. It depends exactly how you do this cold wallet transaction. If you're connecting a USB drive, how do you know that USB drive is not infected with malware? So it can be done, but it needs to be done carefully. It's not as clear as and easy as it seems. There are standard HSM. These are physical boxes that provide very strong key protection and are used in many legacy security settings, in banks and so on and so forth. However, they're extremely inflexible. They do not protect at all against fraudulent key usage. If it's connected to the network, then HSMs are designed to prevent keys from being stolen. But the machine connected to the HSM can carry out any operation. So if it's disconnected, it's like a cold wallet scenario. We haven't changed anything. And if it's connected, it's really solving the wrong problem. And it typically doesn't support many of the existing standards in the cryptocurrency world. And the third solution class is that of multi-sig. And this is where you can define that, for example, 2 out of 3 people need to sign on the transaction in order for it to take place. First, it's not supported by all ledgers. So we lose on the flexibility and support of all coins and going forward because we don't know exactly what coins we'll even need to support next year. And even when it is supported, there's often limited support in terms of the complexity that you can define of this multi-sig, and it can also be expensive. There is a cost that is associated with a multi-sig transaction versus a regular transaction. And also doesn't support necessary operations like employee replacements. For an exchange, and we define that we want a multi-sig where 2 out of 3 of these employees need to sign on the transaction. What happens when an employee leaves? We'd have to replace the key that they held. But replacing the key would mean actually transferring all of the funds. That's very, very painful in an enterprise type setting. You wouldn't want to have to do that. It wouldn't make any sense at all. For an end user wallet, maybe multi-sig can make sense. There are other advantages there are other disadvantages. But when it comes to an exchange or custody type solution, it appears to be something that doesn't support a lot of what we want. Just in terms of HSMs, I just want to mention people often think, oh, hardware is secure. Hardware actually is not necessarily secure. Running inside hardware is software. In August at Black Hat this year, Ledger presented an attack on one of the most respected HSM vendors where they could actually upload malicious firmware and extract all of the keys, completely breaking the HSM. I'm not bringing this up to say that HSM vendors are bad at writing software. I just want to say that hardware is a specifically non-transparent type of solution. It's built on very legacy software. It's very hard to understand how secure it really is. And here is proof in the pudding of something that was around for many, many years. Who knows if this vulnerability was utilized in the past? The mere fact that something is hardware does not mean that it's secure, and we should be looking at transparent solutions today. So now I want to introduce the solution that we believe in, which is secure multi-party computation. And this is an area of cryptography that actually was started in the late 80s. There are thousands of research papers on this topic, so it's really based in deep science. It was purely theoretical until not too many years ago, but now it has become both practical and is being used in industry and in commercial products. And it's also a very active area of applied research, so we're seeing more and more capabilities coming forward. And the idea of MPC is that you can compute on private data without revealing anything but the results. That may seem something which is very difficult, but if you've heard of zero-knowledge proofs, that you can prove something without revealing anything but the validity of the statement, then this isn't such a big leap beyond that. There's a lot of, some people would call it magic in cryptography. I just call it science. And the security guarantees are actually mathematically proven. So it's not that I wanted to intuitively argue that you can't steal that private data. We can actually prove it formally. And here's just a toy example. It's called the dining cryptographer's problem. Yao used it in the mid-'80s when he introduced this area, this whole concept. And you have 3 people who want to go out for dinner or for lunch, and the cryptographer who earns the highest salary is supposed to pay. They do that because, as you can see, their salaries are not great. And they want to do this without revealing anyone's salaries because they're paranoid cryptographers and also embarrassed at earning so little despite having spent so many years learning their trade. And they can run this MPC protocol where they send each other messages, and at the end of this protocol where they exchange messages, it comes out that Alice pays for lunch, but no one knows what Alice's salary actually is, and of course neither Bob nor Eve. And threshold signing is a specific special case of MPC where a key, instead of holding a key in a single place where it's vulnerable, is shared amongst a number of different parties, and the signing can only take place when an authorized subset of those parties agree. So for example, we could have 7 parties, and we could define that only if 3 out of those 7 agree or approve, and we call that 3 a quorum, only if a quorum approves the transaction can it actually take place. Otherwise, it's just completely impossible. And the security guarantees of this are that there's no single point of breach and failure because no one holds the key. In fact, no subset below the size of a quorum even has enough information about the key. All the parties in the quorum have to agree on the message to be signed. So it's not like I just approve, you say, okay, can I transfer $1,000? And I say, yeah, sure, go ahead. And then we all approve the transaction, but I cheat and actually make it be 100,000 instead of 1,000. So the message itself or the transaction details are also cryptographically enforced. And every new signature requires a quorum. So it's not like you can agree once and then afterwards it's, anyone can do anything. And every single separate transaction has this cryptographic enforcement. And even if a subset of a quorum is corrupted or breached by an attacker who can run malicious code and who's an expert cryptographer, the mathematical proof of security says that they can't do anything without a quorum approving it. And the important features of this solution is that firstly, it has fast transaction time because it's software-based authorization. So if we have 3 out of 7 people approving, then those 3 you can get a notification to their mobile or to their laptop. They'll approve it. They'll actually contribute cryptographic material and cryptographic operations. It's not that they just are sending a password because that could be bypassed. And not only that, this authorization can even be asynchronous. You don't need everyone to be online, which is important. People may be in different time zones. Someone might be on a train and not have connectivity, but as soon as the quorum approves, it will go through. We have a secure backup with a zero-knowledge proof of validity, so it's impossible so we can actually validate that the backup is, it's an encrypted backup, that we can validate that it's correct, so it can't be garbage. We can add or remove parties without changing the keys. This holiday of administration of their participants, which is needed in enterprise settings. And also, it's good for employees in your exchange or your financial institution, wherever it is, because they don't have to be present at 2 a.m. and do shift work on Friday night. And your customers are also satisfied because they don't have to wait from Friday to Monday to get their funds out or to transfer between different coins when one is rising or they want to do something else. We can also define very flexible quorum structures, so it's not just 2 out of 3 or 3 out of 7. You can actually say, I want 3 out of 5 people from this business unit and 2 out of 3 from that business unit. You can define policies, so there can be complex quorums and policies for large amounts of funds. You could define even that between midnight and 6 a.m. in the morning. Anything above a certain amount needs a more complex quorum because it looks suspicious. All of this is supported within the cryptographic protocol, making it really suitable to the modern needs and the business needs of custody and of ensuring policy. This is what I mentioned beforehand. The risk-based policies, you can define risk-based policies based on asset type, transaction day and time, transaction size. You can even add white lists, and all of this really makes it a very comprehensive solution. So in summary, threshold signing and MPC provides a comprehensive platform that really meets the needs of and solves the problem that we're dealing with. So it's distributed cryptography, which makes sense because it's talking about a distributed setting and distributed currency, so it really is the same paradigm and mindset. Key material is never in the clear. There's protection against fraudulent key usage because you need that full quorum. You can't go and steal the key because the key is shared amongst those sets of parties. It's suitable for the entire spectrum of solutions, from wallets, exchanges, custodian solutions, supports any device and platform, ledger agnostic, and also enables asynchronous approval of transactions. So thank you very much, and I'll hand it back to Tola.
Okay, thank you very much, Yehuda. Let's move over to Q&A. See, we've got some questions here, and we're going to have to keep time short, so let's keep it down to about 3 minutes, Jin, Yehuda, if that's okay. Let's start with Jin. Jin, what connection, no, you know what, let's start with this one. Do you see Binance planning on expanding its services into custody in the future? You know, we heard you talk a lot about different trading options in various areas, but someone was wondering whether or not Binance is going to expand into the hot custody market.
Yeah, thanks for the question. I think in the short term, that's not a high priority. There's a lot of other work for us to do and a lot of other capabilities that we'd like to roll out first. In the long term, it's something that we've been thinking about for a long time, but really, frankly, it's quite dependent market to market. So there are some regions where it's a little more viable in the short to medium term, and others that perhaps we're not particularly interested in touching, nor will we want to in the future. So it's a bit of a vague answer, but at the moment, in the short term, the answer is no. In the medium to long term, it really depends on the regulatory environment. Okay,
thank you, Jin. Next one is for Yehuda. Yehuda, MPC seems to be a relatively new technology. Can we rely on it to protect such valuable assets?
Thanks. So actually, I disagree. It's not a new technology. It is new to industry. It is new to being deployed, but it's, as I mentioned, it's actually been around since the mid-'80s, and it's built on very strong scientific foundations. We have a very deep understanding of the security guarantees, how to design MPC protocols, prove them secure, formally. Everything that we do has undergone independent scientific peer review as well as independent internal review. So actually, it's a very mature technology, which is now new to industry, but is very rigorously based, and therefore, yes, I certainly believe we can rely on it.
Okay. Thanks, Yehuda. And Jin, one last question for you. Note we have about 45 seconds left, so just keep that in mind. Can you expand a little bit on that connection between volatility and volume? We talked a lot about both, but could you wrap it up a little bit?
Sure. Well, as a liquidity provider, we'd like to see a lot of volume, but if that volume is concentrated into a few large shares hands, you're going to see a lot of volatility. If it's spread out among many traders that are actively trading, obviously we'll have a lot more price action and stability around pricing. So ideally, generally high volume leads to lower volatility, but if you do see both high volume and high volatility, it's a result of some concentrated volume around a smaller number of traders.
Okay, great. Thank you so much, Jin and Yehuda, for your time. I see we're running out of time. Thank everyone for their time today. We really appreciate you joining us. Don't forget to look at the attachments and guides we're including in this webinar. and have a great rest of your workday. Also, one last thing, you can contact us with the information on your screen, and we could just provide you with more details about any of the technology you've heard about today, or provide a demo to your organization. Thanks again for all your participation and questions, and thanks again, Jin and Yehuda. I know it's a busy week.
Thank you very much, Tilla. Appreciate it.
Thank you.
Thank you.